What is up, guys? Stas here. Welcome back to another video. So I was reading a bunch of articles earlier today. You guys know how that goes on finance, the news, the stock market, trying to catch up. And this one right here really piqued my interest. And I figured, hey, let me make a video on it alongside of, breaking down the charts, how the markets are doing today, other stocks that I'm looking at. So I figured this would be a great article to talk about. And here we are, guys. So let's dive into it. If y'all find value, hit that like button. Make sure to subscribe, of course. We're trying to get 50,000 subscribers to 50,000 subs this year, so make sure to do that and follow me on X at Stas Talk Stocks, and let's dive right into the video. So the article title here says, why stock market bulls should be careful what they wish for on Fed rate cuts. And of course, at this point, you guys know the Federal Reserve is signaling many rate cuts in 2024, 2025, and in 2026. And of course, this is all subject to change. Who knows what the heck is actually going to happen? But right now, they're forecasting for a couple in 2024, more in 25, and even more, rate cuts heading into 2026. And you guys can see here, history shows 150 basis points of cuts almost always is due to a recession, according to Deutsche Bank here, guys. Let's come down a little bit more. So equity bulls banking on a soft landing for the economy appear to be taking comfort in market-based expectations for the Federal Reserve to cut its key lending rate by about 1.5 percentage points in 2024. And here's the rub, guys. History shows the majority of the time the Fed has delivered 1.5 percentage points or 150 basis points of interest rate cuts within a year. Quote, it's been because of a recession, observed by Jim Reed, strategist at Deutsche Bank, in a Tuesday note which came out today. And you guys can see this chart that we'll spend a minute or two on right here, which goes over, the past couple of recessions that we've had. Well, it's really more than just, recessions here, but it shows us the federal funds rate, the 12-month federal funds rate, or the 12-month change in federal funds rate over the course of pretty much the past 80 years. So the blue line here tracks the rolling annual change in the federal funds rate, and the red dotted line is equal to 150 basis points of cuts, and shaded areas, which you guys can see, mark U.S. recessions, right? So essentially what this shows is whenever we get aggressive, rate cuts, that is mostly due to a recession, right? And think about it. It makes sense, right? Why would the Fed cut rates? It's to spur the economy, spur more borrowing, more spending. That is really the main or one of the main reasons why the Fed cuts rates, to kind of stimulate the economy again, right? That's the idea. And why would they do that? Well, it's because the economy is in a recession. The U.S. economy is struggling, right? And you could argue right now we have low unemployment, right? The jobs market still looks pretty good. So are we in a recession right now? Arguably not, right? But we could be seeing one potentially. In other words, is kind of what I'm getting from this article, right? Over the course of the next couple of years, maybe 1-2 years, it would not be too out of the ordinary, historically speaking, if we do get aggressive rate cuts here, that we do see some sort of, or it could be because we're on the verge of a potential recession, right? As again, we've seen over the last couple of recessions, right? During the pandemic, you guys can see right above my head, we saw the Fed funds rate get slashed massively. That was a recession. We saw a recession in '08, obviously. The Fed funds rate got slashed, the dot-com bubble back in 87, right? Or whatever year. I'm pretty sure this was 87. Either way, you guys can see the trend here. So pretty interesting. I was reading this article, and right now it looks like we are, I guess, projecting, I thought it was 3 rate cuts of 75, or not 75 basis points each. What was it? 0.25 or 25 basis points each. You guys can see here the 2023 rally accelerated as investors priced in a Fed policy pivot to lower interest rates and rates traders have scaled back expectations for cuts in 2024, but Fed funds futures still reflect a 53.8% probability the Fed funds will fall 150 basis points or more by December. That's a pretty big probability there, guys, in my personal opinion. And again, the charts here do not lie. Again, it looks like every time we've cut 150 basis points, we've had a recession, essentially, based on this chart right here. So what do you guys think about that? I don't want to go too deep into it, but I wanted to cover that as we are heading into, we are in 2024 now, where we are projected to get a good amount of rate cuts. What do you guys think? Let me know your thoughts in the comments. As always, that was that article. One of the articles I was reading earlier today, which I thought was pretty interesting. So keep that in mind here as the markets are not doing much of anything today. Well, I guess we do have some red in the Russell and the Dow, but the S&P and the NASDAQ, they're pretty much flat, a little in the red, little in the green so far today. And let me break down quickly some stocks that I'm looking at here, guys, just based on what's moving on the watch list. So CrowdStrike, yet again, is up big time, over 5%. Now it's completely breaking out here on the 4-hour chart. Like we covered in my video, I think, was it yesterday or the day before? We talked about this ascending triangle, and now we're completely breaking out, up almost 14% on, or $14 on the day. Now we're at $275 per share. So CrowdStrike is on the move here, guys, and let's see if it pulls back, maybe cools off a little bit. We also have DraftKings, which, not to toot my own horn, it's another one that we outlined recently. This is up almost 3.5% on the day, and now it's approaching the top of this channel, which is a very big spot of resistance in the short term. You guys can see if I draw it out, boom, we're pretty much right at the top of this channel. So let's see what we do here on DKNG, guys, in the very short term. Do we break out of here? Do we get the next leg up? Maybe back to the high 30s. Dare I say back to the 40s? Let's see what DKNG does here moving forward, guys. And NVIDIA, come on, man. NVIDIA up yet again on the day. It's up another 3.3%, extending the gains from yesterday, now also extending the breakout above this wedge on the 4-hour chart. Unreal. And it looks like now NVIDIA is pretty much at this major resistance. Actually, no, never mind. No, it's not. It's at a fresh all-time high. I was thinking of a different stock, guys. Where the heck is my head at right now? Either way, NVIDIA is breaking out. Let's see if it cools off a bit, maybe offering an entry point. So that is up another 3.5% on the day. We have tech stocks like Amazon moving, which I believe in the grand scheme of things, it might not happen tomorrow or the next couple of days or weeks for that matter, but ultimately I think Amazon is due for a move towards all-time highs. I don't know about you, but that's kind of what I'm thinking right now. We have a couple of resistances here coming up, like, let's see, 155 is a big one. 170 is a big one. That was the high from the end of March of 2022. Then if that were to break, guys, we could be going towards 188 like that, in my opinion. So I'm personally long Amazon. I'm not sure if you guys knew that. Now you know that. I'm long Amazon. And yeah, it looks pretty good here. All we have to do, in my opinion, is break 156, which I'll set my alert right there, right now. Might as well do that. Mark is at or above 156. So that's Amazon. And let me see one more here, guys. Might as well look at Google as well here, which is also up, as some tech stocks are doing pretty well today. It looks like Google's up 1.2%. Now we're approaching the highs from about a week or two ago, where we hit $143.4-ish. So that's a big spot here on Google. And mind you, we do have an ascending triangle. You guys can see forming here on Google, higher lows into that resistance of about 144. So keep your eyes on that spot. If we do break that point, 144.45, Google could be off to all-time highs, which I believe are in the mid 150s. Let me double check. Yeah, mid-low 150s is the all-time high on on Alphabet, better known as Google. So what do you guys think? Let me know your thoughts in the comments. Hit that like button. Make sure to subscribe. And don't forget to follow me on X at Stocks Talk Stocks. And don't forget to also get your free stocks from Moomoo, up to 15 stocks, each up to $2,000. Fund your account at least $100. You get 5 stocks. And fund your account at least $1,000. Using that link down below, you get 10 more stocks, totaling 15 stocks, each up to $2,000. Guys, get on it. The clock's ticking. You can't beat this promo. I'm telling you guys, it's the best one out right now by far. So get on it. Use that link down below. And with that being said, cheers. I'll catch you all later.